So just the very fact that recessions give rise to really good real estate investment deals is in itself something that makes real estate a very, very attractive investment during recessions. But apart from that, there are also other factors that make it a good investment even in times of downturn. So the first of them is the ability for real estate investments to provide diversification to an investment portfolio. Historical performance data of several investments show that the correlation between real estate and other major asset classes is relatively low and at times negative as well. What that essentially means is that when real estate investments are added into a portfolio, its overall exposure to its volatility will reduce, lowering an amount of risk taken by the individual investor, therefore making it a great investment. Secondly, when someone invests in real estate, they come to own a property. By owning a physical property, which is a great physical asset by the way, they start to build personal wealth. And by building personal wealth, this way, the investor will be able to have a better leverage when it comes to buying more properties in the future. Another thing about real estate which makes it attractive, especially if the investor buys a property to hold it, is the nature of the property that can come to appreciate in value. Not all do, of course, but a majority of the properties do by time. So the investor always has the opportunity to take advantage of that and benefit from the long-term value of appreciation if they ever decide to sell. And finally, there's another very important factor that's almost exclusive to rental properties that make them a very, very attractive investment. And that is their ability to generate a consistent income for the owners in form of rent, generally through all phases of the economic cycle. That, in my personal opinion, is very reassuring because it has the extra stable, or it rather gives the investor an extra stable income during an economic downturn. And that is just a great safety net for anyone, really. So for me, that's a tiebreaker when it comes to another reason as to why we should include real estate and rental properties, particularly in this course. Now, apart from all these, I don't know if you've heard this before, but some people and investors tend to think that real estate investments, especially in residential rental properties rather, are recession-proof because logically everyone needs a place to live in, and there will always be tenants, and so there will always be an inflow of rent income. Another popular notion among people about real estate is that property values will always go up no matter what, even if there is a recession. Now, yes, there's a truth to all these notions to at least a certain extent. For example, in the US, if you take the median sale prices of residential properties on the wholesale, or rather on the whole, you can see that on average, property prices have only increased in the US, even though the country went through several recessions during this period, one of which was the Great Recession that was triggered by the housing market crash. Similarly, if we look at the consumer price index for rents in the US over the years, that too has seen growth since 1950s. Now, yes, all these data depict the performance of the overall real estate market and rental properties. And these figures are probably why some investors still think that there will always be rental income and that property values will only ever, if ever, go up. But the point that they miss here is that not every individual property will perform this way. So not every property is capable of outperforming in a recession or outperforming a recession together. Not every property will have the demand from tenants, and certainly not every property will keep going up in their value no matter what. It's only the properties with great economic value that have great performance potential as well that tend to perform well. Like properties in, like I said, good school districts, the example we discussed in the last video. So just finding a random property and buying it, it's not what you need to succeed, and it is not that it will succeed really in real estate investing. The key is to find a property that has the potential to perform well and will also maximize your returns.